Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and this is the Forex weekly outlook for the week of December the 26th, 2011, the final year or the final week, of 2011. So a bit of a different presentation here we're going to be looking at today. What I'm going to be looking at is yearly patterns, where we're likely to go in 2012 to see if we can get a feel for this. Now what I have is a straight line drawn right across horizontally across the screen. We can see that we're looking at where the US dollar index finished the year in 2010. We can see that it's going to finish 2011 in almost exactly the same place. I have a makeshift trend line drawn up here. Now the dollar has really had a poor year by the look of this chart. You can see by drawing this horizontal line right across the screen, the dollar has stayed below basically its closing price. I'm using December 26 as a makeshift closing for the year for the dollar index, and we can see that the dollar stayed below that level the entire year, and now at the end of 2011 has come back to exactly the same place. Now this could be interpreted as corrective, or it could be interpreted as the dollar is getting ready to break this level, and we have a trend line down below to some degree to point out that this is a move we're getting ready for a stronger move in the dollar. Now again, looking at our indicators back from the beginning of 2011, the indication from some of the indicators we're going the wrong direction, saying that the dollar was going up, and in actual fact the dollar went down. And this is what can happen at this time of year, and this is why we want to be very, very cautious about trading the last week of December and the first week of any new year. And this is just a very good example of this. Now my opinion is we're going to be looking for this makeshift trend line to hold in this 79.50 level. And again, it could be difficult for this to hold, but things are certainly looking better in 2012 for the dollar than they did in 2011. How much better? That's going to be left to be seen, but the main thing is we want to understand where we've been over the course of 2011 and potentially where we could be going in 2012. So this really helps us see what kind of a year the dollar had, and it certainly wasn't a good one. So if we can get above this level here, this makeshift level that I've drawn around that 80-70 level, and push up above this horizontal line, I think the dollar has a real shot at moving higher. But if this level continues to fail, then we could have another year of selling dollars. So we'll be wanting to keep an eye on this level very closely. This brings me to the equity markets. Where are we sitting with this S&P 500? This is a $1 million question. Again, I have the same horizontal line drawn right across here, which is coming in around 1258 approximately. So the S&P 500 also hasn't really had that great of a year either, to be perfectly honest. This line drawn here, we've had a move up about 114 points to the upside from where it closed in 2010. And to the downside, however, we've had about 194 points. So the move to the downside has been almost twice the move to the upside. When we look at this, we look at advances versus declines. Most people, they'll break it down from day to day, week to week, month to month. We look at it on a yearly. I'm looking at it from a yearly perspective. The move to the downside, and this is factual, was twice the move to the upside. So not exactly overly bullish for the S&P 500. Now we did manage to stay above this 1260 line for the better part of the year, going into basically the end of the summer, and then it just tapered off and it fell pretty hard. So we've managed to claw our way back up and close basically flat, maybe up a couple of points for the year, but very, very small amounts. When we look at these levels, I've got a bit of a wedge formation drawn in here. Support's coming in down around 1200, 1203. Be interesting to see if this level will hold, or if we're going to break the top of this wedge and start pushing over the 1300 mark. Now again, when we look at the indicators from last year, it was telling us we were in overbought territory and we were likely moving lower. And again, in that first week of January, it can be very volatile, and the indicators here were actually not accurate. And the market, it was telling us that potentially we're moving lower, and in actual fact it moved higher. What's interesting about that signal is this year it's telling us we're going to move higher on the S&P 500. So if up is down and down is up in wild January trading, this suggests the S&P 500 is going lower, not higher. Now again, we have to see how everything plays out at the beginning of the year. Growth forecasts out of the U.S., the data is moderately better, but not a lot. So again, we'll be keeping a close eye on things. But as it stands right now, the S&P 500 is flat. It's essentially whether you went long or short 1 year ago to this date. If you went long, you would be up a point or two, and that's about it. So it really does make you question whether the buy and hold is truly a manageable strategy under current market conditions. Now, when we look at light sweet crude oil, we have a very similar formation here. You can see that I've got this little bit of a wedge thing drawn.